name's Travis, and in today's video, we will be talking about the basic definitions of what a stock is, how to evaluate a stock, and we'll actually go through a live example of reading and how to understand what is displaying on the stock charts there. With that being said, I have a free newsletter, so you get free weekly tips straight to your inbox, and there's limited spaces available, so if you tap the link in the description, you can feel free to sign up for that, and subscribe and like this for the YouTube algorithm. With that being said, let's get started. We're going to look at this company called Simon Property Group. And so we can easily Google, in this case, Simon Property Group. So whatever company you want to look into, you just type in either the ticker symbol, which we'll go over what that is in a hot second, or the company name. So you can just type in Simon Property Group and then stock. And in Google, what you'll see first is you'll see this basic chart that updates by the second. And then on the right-hand side here, you will learn about kind of the basic details. So in general, what the company does here, who the CEO, when it was founded, how long it's been around, where it's located. This information typically isn't as helpful when you're searching up a company. Most of the time, you'll probably know what it does already. But yeah, so that's a decent starting point, I suppose. And again, what we'll see up here is we will see the title of the company that we're looking into. So in this case, it's Simon Property Group Incorporation. And you can see this ticker symbol right here, SPG. What a ticker symbol is it's a representation of what that company is. It's kind of a acronym, so it's a shorter version. So when you search up Simon Property Group and you want to buy their stock or look more into it in your application, what you'll do is you can either type in the full name of the company, Simon Property Group, or you can type in the ticker symbol. So it's just an easier and faster way to get to the stock that you're interested in. And then NYSE stands for New York Stock Exchange. So there are different types of markets that you can purchase it from. But again, in the apps like Webull, and you can learn more in the description below, they'll have all of the public traded companies in there. So don't worry too much about which one it's traded on, but definitely look into the ticker symbol so that you know. Moving down, we have the price per share. So $85.55 is the current price for Simon Property Group to buy one share of that. And what that means is if you view a company as a pie, for example, so a stock is a representation of partial ownership of a company. So let's say you buy one or two shares or stock in this case, at $85.55 per share, you own that sliver of that pie. So again, that's a good way to kind of visualize what a stock is before buying it. And what you'll notice here is these numbers here will either be red or green. And so green means that it's a gain for that specific time period. And red is going to mean that it decreased within that time period. So definitely look into that. And USD just stands for US dollars. So I'm currently based in the US, and that's why my stocks are showing in that form of currency. Let's see. And then after hours, that just means that there are some stocks that are being traded when the market closes. And so that's kind of the after hours period. It typically does not fluctuate as much after hours as it does during the market open. And let's see, down here, what you'll see is you'll see different representations of time periods that you can look into. Because I'm a long-term investor, I recommend looking at least at the 6-month period so you can start seeing the trends. If you start looking at the 1 month, 5-day, or even 1-day periods, you won't see the full understanding or full scope of kind of the different fluctuations that the specific stock has, right? So you're getting a smaller window into it, and you want to see a bigger window so you can understand more of the current trends and kind of where you think the stocks might be going based off of what you see here. So this is what it is. You can highlight it and it'll show you from this period over to whatever period you're interested in. The dates are down here based off of this here. YTD stands for year to date. And then you can go beyond that. So 1 year, 5 years, and max since its IPO way before 1997. So that's the general basics of this. And looking into it, what we notice is we see a dip here, right? And then so what I typically do when I figure out, that dropped a lot at this time period, what happened, so I can understand more about the company itself, then figure out if it's the right stock to purchase. That's kind of one variable or one factor that I look into. And in this specific case, it's because of the pandemic that happened, and so the stocks dropped here, and you can see it fluctuating. And so the general idea of a stock is you want to buy low and sell high, and you also want to diversify to mitigate risk or lower your risk. General basic concept. I cover that in my other YouTube video there. And we'll go over the definitions down here as well. So open just means that's the price that it opened at today. Highs and lows are the US dollar prices that are at its highest and in that time period, or the lowest in that time period. Market cap is the amount that the company is worth overall based off of the stock market. So in this case, it's 28.07 billion. So the B stands for billion, and if it were an M, it would be million, but in this case, it's billion. PE ratio is a more intermediate terminology, so we'll cover that in a future video, but it just stands for price to earning ratio. And in this case, it's 19.45. This one is really interesting to look at. It's called dividend yield. So DIV just stands for dividend. And on a high level, what a dividend is it's a percentage that the company will pay you back, and it's pretty much a thank you or an incentive for you to invest in this company. So let's say that you invested $100 within Simon Property Group, right? And the dividend yield is 6.08%. At the end of the year, you'll get $6.08 associated for every $100 that you put in. The reason why I used 100 is because it's easier to do the math. So yeah, that percentage is the money that they'll actually give back to you. What I recommend with dividends is I personally reinvest dividends back into the stock for compound growth. So the more dividends you put back in, the bigger money pool that you have in that specific stock. And then when you get more future dividends, it's going to keep growing on top of that for the most part. One trap that I would recommend also is do not fall for it if it just has high dividends and the company itself isn't profitable at all. For example, in this specific situation, Macy's will have a high dividend. We won't cover it too much in detail in this video. We'll do it in a future video, but don't fall into the trap of, wow, it has high dividends, I'll get a lot of money back. Also think of overall, how is the company doing? And so we'll look into that further as well. Dividends is just one of the many variables that you need to look into when purchasing a stock. And last but not least, related to dividends, is that not all companies provide that. So just keep in mind that, again, this is just an incentive, but don't fall for the trap of high dividends, I'm going to do it for sure. You need to look at like the debt to equity ratio and all these other things that we'll cover later. Previous close right here is $87.17. And what that means is that it is the price that it closed either yesterday or whenever the market was last open. Market's not open on certain holidays, for example, or weekends, and it's opened, and it's revolving around the East Coast time frame, just so that you know, for the most part, specifically if it's the New York Stock Exchange. And then we go into here, which are the two last main things that I want to cover in this video, which is the 52-week high and the 52-week low. And what this means is the 52 weeks represents pretty much the year leading up to the date that you're looking at. So this right here is $151.59. And so what that means is that the year to date, that's the highest price. And so what I typically do is, wow, that's the highest price, and then I'll compare it to the current price of it here, which is $85.55. Okay, it looks great. It looks like a discounted price. Obviously, other, again, variables that go into making that decision. But this is a good way to start comparing and start thinking about where you are today with that current stock price of that $85.55 here. And then the 52-week low, as you can probably guess, is the lowest point of the stock when it was, let's see, you can even hover over and find it, but it is one of the lowest points around this time period here. And that is also a good way, an indicator to see, hey, is this close to the lowest point or is this close to the highest point? Because the past trends will definitely help make those decisions. On top of all of these basic things, it's really important to know about the company before you invest in it too. So where the company's going, how the CEO performs in the market in general. And so when you scroll down here, they'll have top news. Make sure that when you open up the top news, it's one of the latest ones. If it's, too far in the past, it might not be as helpful. And then they'll have a lot of the times what analyst reports are saying, and analyst reports are essentially people that get paid to evaluate a stock in general. Have some caution around looking at the comment section in a lot of these. A lot of people will just comment their thoughts on it, and they're not necessarily professional. So I would just read the article, but really wouldn't really care too much about the comment section there. You can obviously view all here. And then when you scroll down, you can get more information here. Yahoo Finance is a great resource too if you want to go into more detail. But this Google result will definitely show you the basics of what you need to start looking into, the basics of the research that you'll need to do to say, hey, this is a stock that maybe I want to invest in. This might not be one that I want to invest in now. So with that being said, I have a weekly guide. If you tap the link in the description, you can sign up for free. There are limited spaces available, but I think if you're interested in what we talked about today, you'll be able to gain more insight into my tips and tricks on how I would choose a stock. I just want to also mention that I'm not a legal financial advisor for you specifically. This is for educational purposes, so definitely take what I'm teaching you, but also do your own research before investing your own money into anything, which is a good rule of thumb. And another thing, as you're buying your first stock, for example, think about diversifying your portfolio. So you don't want to put all of your eggs in one basket. You want to be able to distribute the money across multiple different stocks, right? So that you can lower the risk of losing money out on that, or whatever the case may be. But that diversifying will definitely help as you're starting off. Okay, so I think that covers it for this video this week. And if you have any questions, leave them in the comments below. Feel free to give a thumbs up or subscribe to this if you've learned something new. And again, sign up for my emailing list if you haven't already. Okay, bye guys.